This is Alan Bush with the Daily Financial Forecast for Thursday, August 2nd. Starting out with the stock index futures, there was some pressure in the overnight trade on news that it appears that the trade wars are heating up again. Since then, though, we have seen some recovery in stock index futures, at least U.S. stock index futures. Also, it seems rather interesting that while the U.S. stock index markets are holding up relatively well, we are seeing Chinese equity markets under more pressure. In fact, today it was the Shanghai stock index that fell by over 2%. So that has been a trend in recent months, where the U.S. indices holding up better than the Chinese equity markets. Also, stock index futures now still a little bit lower, but I would not be surprised to see a move back to higher on the day. Moving over to the currencies, the increased trade tensions helping the U.S. dollar to advance, putting pressure on the euro currency. But also we have the Chinese yuan now falling to a 14-month low. The pound lower, even though we did have the Bank of England raising interest rates as expected by 25 basis points. But what was surprising was the vote was 9-0 to hike rates. Most analysts were looking for a 7-2 vote to raise rates. So that appears to be a bit on the hawkish side from the Bank of England, supporting, or what should have supported the British pound, but did not. Moving over to the interest rate futures markets, flight to quality buying coming in light of the heightened trade tensions, but it was only limited. The bonds were really not that much higher, and in fact now the long end of the curve, the Treasury bonds, are lower. So we are tending to see, we are seeing futures responding less and less with flight to quality buying on trade news or worsening trade news. So I think that should be viewed as a sign of weakness for the interest rate futures markets. It was just a couple of days ago that the Treasury bonds fell to a 10-week low. So any rallies should be sold, I believe, especially at the long end of the curve. Also, we have the U.S. economy still apparently in good shape. Even the Atlanta Fed now predicting that third quarter GDP could be up as much as 5%. I'm thinking that might be a bit on the overly optimistic side, but in any event, the U.S. economy seems to be performing relatively well, and that suggests lower prices for the interest rate futures markets. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.